I want to simply explain the most effective, easiest way to start trading, and I'm going to give you three different scenarios. Three different scenarios. If we're at new all-time highs for Bitcoin, if we've had a nice little pullback, but it's not very large, or if we've seen a large pullback, because people are going to watch us at different times. And right now, we're nearing all-time highs, but we're a little bit off of it. And people might be getting a little bit excited saying, hey, maybe I should start trading. And I want to explain how you can do this, how I've done this over time to make really good returns without getting stupid, without losing a lot of money. And you can do this at any time. Some people say, no, you have to wait for the specific perfect moment to start trading. I don't think that's true. I think that gets a lot of people in their own head. And then when the perfect moment comes up, they're still too scared to pull the trigger. They don't understand what they're doing either because they have no experience, so they might waste a really good opportunity. So I'm going to tell you right now, you can start trading today. It's not that hard. People try to make it very hard. It's not that hard. So if you don't mind, hit subscribe so you can see future videos like this. We'll be talking about this. I'm going to be showing BYDFi and some trades I've done on BYDFi. But if you want to start trading, you can sign up underneath the video with BYDFi or with one of the other links. There are other links underneath the video too. But you can start trading in just a few minutes. BYDFi, we continue to give people lots of money. Like we just wrapped up a campaign where you could get up to $10,000 of XRP. Right now we're doing a campaign, or we're starting a campaign where like the more everyone trades under my link, the bigger the prize pool gets, and then you can get part of that prize pool. So check that out underneath the video. It's a great place to trade too. There's no KYC, meaning you don't have to give out a bunch of your personal information. Now, what is trading? Why do people leverage trade as opposed to just buying crypto? Well, it's to get better returns, right? If you buy $100 worth of Bitcoin and Bitcoin goes up to $236,000, your money doubles in US dollar terms. So we are past the time where Bitcoin's at a bottom. Like we've moved up 6x or 7x since the bottom when Bitcoin was $16,000. So of course there are going to be really good returns here in the future, and you'll probably outpace like the NASDAQ or the S&P 500. I believe in Bitcoin a lot, but I wouldn't expect like a 100x return on Bitcoin this cycle by any means. Like I think a lot of people would be happy if Bitcoin just doubled here. So if you're getting in now and you're wanting bigger returns, then you kind of turn to altcoins. You turn to smaller cryptos, which a lot of them have started to move, but there's also a lot more risk and a lot more work that goes into buying small cryptos. Like if you're trying to buy something outside the top 10, let's go to CoinMarketCap. There's a lot of risk in these cryptocurrencies, and even more down here. And then people try to get into like the $1 million cryptocurrencies that maybe go to 100 million, but most of them just die. And you end up losing a lot of time and money when you could have just bought something like Bitcoin and made more money over time. And you don't have to try to get in and out and deal with all the taxes, implications, and all that kind of stuff. So what I've realized is I'll take some altcoin positions here and there when I see good opportunities. But for the most part, I've been leverage trading with the part of my portfolio that I want to get better return. So I still have a large amount of crypto that's just held spot. Like I just buy it and then hold it. But I have been taking the higher risk portion of my portfolio, let's call it 5 to 10%, and putting it into leverage trades across various platforms. So how do you do this? Because people hear about this and they're like, okay, let me just go buy Bitcoin and 50x leverage. I can turn my $100 into $5,000 of purchasing power, which, you just click this, turn to 50, and then you buy, right? And people end up getting wiped out because we'll see a 2% move down. And if you're on 50x leverage, you get wiped out, you get liquidated. So how do you go about not having this happen? How do you actually make money without getting like too greedy? How do you approach this when Bitcoin's at all-time highs? Because a lot of people want to wait and they want to like day trade, right? They want to put it on the 1 minute chart, read some mystical pattern, and then be able to make 1% a day or something like that. That never happens, to be clear. Like you can't make 1% a day. That's not possible. Over time, maybe make it for a day or two, 5 days, something like that. But what happens is you turn $100 into, let's say you even double it, $100 into 200, into 400, into 800, and then you bet it all, and then you lose it all. So you end up at zero, no matter how many days you double your money. So what should you do, right? What should you do? Well, first of all, I like trading Bitcoin. I think Bitcoin is probably the easiest asset to read, the easiest chart to read. And what I've been able to do is set up a couple different kinds of trades. So let's say we're at all-time highs. Right? Let's say by the time you're watching this, we're at 125,000. People will say that's a terrible time to trade. Honestly, I would rather see a bit of a pullback like where we are right now, but it's not too late to trade at all-time highs. What you want to do at that point is set up a low leverage long position, assuming you think Bitcoin's going to go up. So you set up a low leverage long position with a small portion of your leverage trade portfolio. Let's say you have $1,000. Maybe you set up a $300, $500 long position, something like that. Some people will say no, only like put 10% of your portfolio into leverage trades. But let's say, you put in $300. We would have to move down 33% for you to get liquidated. So at 120,000, we'd have to go down to like 80,000. At 125, it'd be something like $83,000 where we get liquidated. So assuming Bitcoin does that and we go all the way down to 83,000, you could get liquidated, but you could also add more leverage or add more margin because we didn't put in all your capital. So let's say you have $700 left. It'd be really easy to lower the liquidation price significantly to the point where you wouldn't get liquidated. So that is one way to take advantage of hitting all-time highs, because if we move up from there, great. If we move down from there, you can actually use some of your capital to add margin. And then also you can open up new trades on the way down. So let's say we get down to 112,000. Right? We had already seen some support here. Maybe you open up another long position for $200, and then we get down to 100,000 and you open up another long position, and then we get down to 74,000 and you open up another long position, and then you still have capital to add to your trades to increase the margin to lower the liquidation price. Now, if we go down to $50,000, everyone's going to get liquidated no matter where you are. So I wouldn't worry about that too much, because that, if we go into a deep bear market, your goal is just to just stop the bleeding or get liquidated, and just realize that we're in a bear market. There's not much you can do there. But if we're at all-time highs, that's kind of how I would approach it. You can set up low leverage, so we're talking 3x trade, something like that. Maybe a little bit more aggressive, maybe a little bit less, but something around there. Now, if we're where we are right now, right, we're at 118,000, maybe we're at 115,000, something like that. So we're not at previous resistance or previous support, but we're just down a little bit from the high. You can do the same thing. Basically, you can set up low leverage trades. Maybe you get a little bit more aggressive. Maybe you're like 4x or something like that, 5x, and you can still set up trades. That's what I would actually like to do instead of setting up trades at all-time highs. But you can still set up trades then at a 4 or 5% pullback. It just gives you more cushion. If we are at a significant level of support, right? Let's say we are at 112,000, or we're at a previous point of resistance, which is 112,000, right? So the last couple times that we've made big breakouts, it's because we flipped the previous resistance into support. So we flipped $48,000 from resistance into support. I put long positions on right here, very aggressive long positions. So if you want to make a lot of money quickly and get more aggressive, this is where you can do a 10x, a 20x, a 30x. I did an 80x position right here because we were right at the bottom. I had a stop loss. So if we broke below, if we went down to 47, it would close out my position. Actually at 80x, it might have been a little bit higher of a stop loss because you get liquidated on a 1.25% move at 80x. But you can set it up to be very aggressive because typically we bounce within we've been within $1,000 of the previous resistance, and we flipped into support. We just did that 112,000, and what did I do? I opened up a 60x long position. Now, to be clear, this 60x position turned into lower leverage. It's like a 20 to 25x position because I added more margin just to be careful because I was going to bed. So I lowered my liquidation price under $110,000. We went down to 111.5 thousand, and I set up the trade at 113. I didn't want to get too greedy in case we flipped 112,000 and we jumped at like 113. So I just opened the trade a little bit early. Of course, I could have gotten a better position, but we've been able to make over 100% on a basically $1,500 trade in just over a week. So we've been able to make massive returns in a very short period of time because we got in right when we were flipping the previous resistance into support. Now, what am I even talking about? If you don't know what I'm talking about, resistance is where we go up to a certain point and get sent back down. Support is when we go down to a certain point and then go back up. So typically what happens, what we see a lot of the time is we see these macro, like you zoom out, these macro resistances flipping into support. So that's why I got more aggressive right at this point and we rode it up. So that is kind of how I would approach it. Of course, there are various ways to determine like where to take profits. Right now, we're at an RSI of 60. And I will take profits more aggressively on these higher leverage positions because they can turn against you very quickly and it's better to book profits. But I am going to wait a little bit longer. I would not be surprised if we came up to, where we are right now and then came back down and flipped this previous trend line into support. So that might be, us coming back down to 118,000 or something like that, and then moving up again. So I plan on taking profits on this trade, but I'm going to wait a little bit longer. Again, RSI is not too overbought. Overbought is 70 or above. I wouldn't be surprised if, like I said, if we come back down a little bit on the price and then move up to overbought, move up to a new all-time high, and I will be looking to take profits at that point. So those are the three different scenarios. If we're at all-time highs, go low leverage. If we've seen a little bit of a pullback, I'd still go low leverage, and then you can just have a little bit more cushion before you get liquidated. And if we are at a previous resistance or support, we're like significantly down from the all-time high, then you can go a little bit more aggressive. So you might be able to go higher leverage. But I wanted to lay that out really simply. That's how I approach the market. And then with those lower leverage positions, I've left a lot of them open for a very long time. A lot of people won't do this, but it's actually a great way of just riding out the bull market. Of course, you have to take into account there are some fees over time. There are funding fees, but we've been able to get insane returns. And what I've done is I've just taken some profits off the table, just like booking some profits. You can see XRP's up like $1,000 in realized profits. We did a 6x position. We got in at $1.45, which isn't even the best time because it was at like 50 cents. And we've gotten a 720% return. We've taken some profits. You can always add margin over time too. But yeah, we've been able to get really good returns. And then if you want to, if you want to get more aggressive too, after you're up a lot like this, you can roll the positions. So you could close this out, right? This 60x position, and you could open up a new trade with double the initial collateral. So instead of 1,500, it would be 3,000. And then if we continue moving up, you actually get a much better return because you have double as much in the trade, but it does move up your liquidation price. So it's more risky, but you can also get much better return. Something, you could do too. You could roll this into a lower leverage trade. So maybe less potential upside, but also less risky. Right? So you could get, for example, $3,000 in the trade. And if you're on a 3x trade, your liquidation price would be under $80,000 right now, which actually doesn't seem like that bad a scenario, right? You can close out the position that you've made 100% in and then just roll it. You could even put like a stop loss at 100,000. So you could get out with your initial capital if it continues falling down. But if it goes up, then you can make a ton of money. Let me know your thoughts on all this underneath the video. I really do appreciate it. Check out the link to BY DeFi underneath, and I'll see you all in the next one.